If your income stopped tomorrow, how many days would your household stay calm before pressure entered the room? Most Americans believe they are prepared until one unexpected event tests that belief. A sudden job pause, a medical bill that arrives without warning, a major car repair, or a family obligation can shift everything in a single week. Financial stress rarely announces itself in advance. It shows up quietly and asks one simple question: how strong is your foundation right now? Today we are building something stronger than a basic safety cushion. We are building a financial fortress designed for real American life. A fortress emergency fund is different from a small backup balance. Many households keep a few $1,000s aside and call it protection. That amount may handle one problem. Real life often brings layered expenses. A car repair can appear during a period of reduced work hours. A medical bill can land at the same time rent increases. A fortress is designed for stacked pressure. It absorbs impact without shaking your long-term goals. The purpose is stability, control, and time to make clear decisions instead of rushed ones. Across the United States, living costs have moved higher over the past decade. Housing payments, groceries, utilities, transportation, and healthcare consume a large share of income. A basic emergency fund formula such as 3 months of expenses may feel comforting on paper. In reality, many American households require a more detailed structure. A fortress approach begins with clarity. You calculate your real monthly survival number. This includes housing, food, utilities, transportation, healthcare, and essential family responsibilities. Remove entertainment and optional spending. Focus on the true survival base. That number becomes your foundation block. Now imagine your survival number is $4,000 per month. A standard 3-month cushion would equal $12,000. A fortress structure stretches further. 6 months creates breathing space. 9 months creates confidence. 12 months creates strength that changes behavior. When income uncertainty appears, you do not panic. You plan. The psychological shift alone is powerful. Confidence influences how you negotiate salary, how you respond to workplace changes, and how you evaluate new opportunities. Building this level of protection requires structure, not motivation. First, separate your emergency fund from daily spending accounts. Keep it in a secure, accessible savings structure within a reputable American bank or credit union. The goal is liquidity and safety. Avoid placing emergency reserves into volatile investments. A fortress must be stable. Growth is secondary. Access and reliability matter most. Second, automate consistency. Set a fixed percentage of income to transfer into this fund every pay cycle. 10% is strong for many households. Some families begin with 5% and increase gradually. Consistency builds walls brick by brick. A sudden large deposit feels powerful. Steady deposits create real strength. Review your spending categories and identify quiet leaks. Subscription services, frequent dining out, impulse purchases, and upgraded lifestyle habits often redirect hundreds of dollars each month. Redirecting that money accelerates fortress construction. Third, protect the purpose of this fund. A fortress emergency reserve serves true emergencies only. Job interruption, medical necessity, essential repairs, family crisis. It does not finance vacations, new electronics, or seasonal sales. Clear rules preserve integrity. Write down your definition of emergency and keep it visible. Discipline builds confidence. There is another layer most people ignore. Income diversity strengthens a fortress. Many American professionals rely on a single paycheck. Adding a secondary income stream increases stability. Freelance skills, consulting, remote contract work, or small service businesses can create additional inflow. Even a modest secondary income directed fully toward your emergency reserve can shorten your timeline significantly. Extra income becomes reinforcement for your walls. You may wonder how long it takes to complete this structure. The answer depends on income, expenses, and discipline. A household earning $70,000 annually that saves $800 per month builds nearly $10,000 in 1 year. Increase savings to $1,200 monthly, and the progress accelerates. Focus on steady expansion rather than speed alone. A fortress grows through repeated action. The emotional benefit appears before the number reaches its final goal. At 3 months of expenses, you feel partial relief. At 6 months, decisions feel calmer. At 9 months, your posture changes. You evaluate opportunities from a place of strength. At 12 months, you operate with quiet confidence. That is the moment your fortress stands tall. Building this fund also protects long-term goals. Without an emergency reserve, households often interrupt investments, delay plans, or sell assets during stressful periods. A fortress acts as a shield around your future. It absorbs shocks so your long-term strategy remains untouched. Stability preserves momentum. This process requires patience and clarity. Every deposit represents control over uncertainty. Every month of coverage increases resilience. The goal is not perfection. The goal is durability. A fortress emergency fund transforms financial stress into manageable events. It replaces fear with preparation, and once built, it changes how you move through life. A fortress emergency fund becomes powerful when it reflects real American cost structures rather than generic formulas. Begin with a precise survival audit. Pull your last 6 months of bank statements. Categorize expenses into housing, utilities, groceries, transportation, healthcare, communication, childcare, and essential obligations. Average each category. This produces a realistic baseline rather than a hopeful estimate. Many households discover their survival number is higher than expected. Awareness strengthens planning. Next, stress test your number. Imagine reduced work hours for 3 months. Imagine a medical deductible paid in full. Imagine a major vehicle repair combined with travel for family support. Add those possibilities to your survival baseline. This exercise reveals how thin or strong your current cushion truly is. A fortress is designed after testing, not guessing. Placement matters. Choose a secure savings structure that provides stability and easy access within 1 to 2 business days. Online banks and established credit unions in the United States often offer efficient digital access. Keep the funds separate from checking to reduce temptation. Visibility without friction creates discipline. Label the account clearly as emergency reserve. Language shapes behavior. Now build layers. The first layer equals 1 month of survival expenses. This is your immediate shield. The second layer extends to 3 months. The third layer extends to 6 months. The fourth layer completes 12 months. Treat each layer as a milestone. Celebrate progress quietly while maintaining focus. Progress tracking reinforces consistency. Many Americans increase spending automatically when income rises. A salary increase often upgrades lifestyle within weeks. A fortress strategy channels a portion of every raise directly into the emergency reserve until the 12-month target is achieved. This habit accelerates completion without reducing current comfort drastically. Income growth becomes structural strength. There is also the discipline of controlled expenses. Review recurring bills annually. Negotiate service rates where possible. Compare utility providers. Evaluate mobile plans. Small reductions across categories free hundreds of dollars per year. Direct these savings toward your reserve. Efficiency fuels stability. Side income can transform timelines dramatically. Remote project work, tutoring, digital services, consulting in your professional field, or local service offerings can generate targeted deposits. Even an additional $500 per month directed fully into the emergency fund adds $6,000 per year. Focused allocation builds visible momentum. Behavioral clarity protects the fortress. Create a written emergency policy for your household. Define qualifying events. Establish a simple approval rule between partners if applicable. When an emergency occurs, withdraw only what is required. After the event passes, prioritize rebuilding immediately. Restoration keeps the structure intact. Another advanced layer involves separating short-term and long-term security. Maintain your fortress in liquid savings. Keep long-term investments separate and untouched. During periods of market volatility, the presence of a strong emergency reserve prevents emotional decisions. Stability reduces reactive behavior. Calm thinking preserves strategy. Inflation also deserves attention. Review your survival number annually. Adjust your target upward as living costs change. A fortress built 5 years ago may require reinforcement today. Maintenance is part of ownership. Strength remains through updates. For families with dependents, aim toward the higher end of coverage. Single earners supporting households benefit from extended reserves. Dual-income households may adjust based on job stability within their industries. Evaluate industry risk levels realistically. Economic cycles influence employment patterns. Preparation reduces anxiety during uncertain periods. Technology can support consistency. Use automated transfers aligned with paydays. Use budgeting applications to track progress visually. Set quarterly calendar reminders to review your emergency balance and survival number. Systems reduce reliance on willpower. There is also the mindset shift that occurs when your fortress stands complete. Decisions become deliberate. Career transitions feel manageable. Negotiations feel balanced. You operate from stability rather than urgency. That psychological advantage influences every financial choice you make. Some viewers ask whether 12 months is excessive. Consider the pace of hiring in specialized industries. Consider economic slowdowns that extend job searches. Consider health recovery periods that limit immediate work return. Extended reserves provide time to secure quality opportunities instead of accepting the first option available. Time is leverage. Throughout this process, remain focused on clarity and patience. A fortress is constructed through consistent deposits, disciplined boundaries, and realistic planning. It grows steadily. It stands quietly. It supports every other financial objective in your life. When you look at your emergency reserve and see 12 months of survival protected, you experience something powerful. You experience control over uncertainty. That control reshapes how you think, how you plan, and how you move forward. A Fortress Emergency Fund does more than hold money. It protects your peace, your future, and your ability to choose your next step with confidence.